Hi guys, welcome back. So today we'll be taking a look at some of the Chinese stocks listed in the US. Before I begin, remember to take a second to give the video a like and subscribe as you greatly help our channel. Without further ado, let's first start off with Tencent. So you can see that Tencent continues to drift down further, and we are likely to be heading down perhaps towards a bounce very soon. After breaking down this 37.92, things started to turn very bearish, and it wasn't too good. In fact, if you look back in history, we are looking at a very critical support now, currently at around this $31. In the event that we actually break down the 31, then it's likely for us to be looking towards this $28, which was a previous resistance, and hopefully it will turn to support when we were to retest those areas. Resistance to watch, it will be $33 and $35. Moving on to Alibaba. So for Alibaba, you can see that we are already back near its lows. In fact, we already broke down this previous low of 73.28. After this $78 did not hold, and this is of no surprise. Whether or not this will hold, it will depend. It will depends on next week price movement. Of course, it can break down and trigger some stop losses, and then we can have a short-term rebound before going down further. And this will be the gap that needs to be filled. And this was back all the way in somewhere in 2016. And the low of this gap is around 62.78. So we are still around $10 to $11 away from this target price. So resistance to watch will be $79 and also $83. Let's move on to NetEase. So for NetEase, it is already very bearish, and you can see that we are clearly back towards this 68.62, and 68.62 seems to be the short-term bottom for now. Hopefully, we can get a double bottom. In the event that we do not get a double bottom from here, then it's ready for us to head down slightly further, potentially triggering some stop losses, and thereafter potentially seeing a bounce. That said, if we were to break down this with high volume next week and we continue seeing some selling pressure, then there may be no support until 53.17, and of course the $60 psychological support level. Resistance to watch would be 74 and 78. Let's move on to NIO. So NIO had a pretty interesting week. You can see that after this 38.2% broke down, things were starting to turn very bearish for NIO. And we, in fact, revisited this $11.67. Just yesterday or 2 days ago, we actually hit this particular low here at around 11.73. And we closed the week at 11.75 levels, so very near the lows for the week. So that is not a good sign. As I said previously, there's a very good chance for NIO to come down all the way to around $8. You can see that there were some gaps back then. This was in 2020. You can clearly see that there were gaps here that needs to be filled. So we may come back and fill those gaps before we can see some buyers stepping back up at around $8 for NIO. For the resistance we are watching would be $14.30 and $17, which is still pretty far away. Moving on to JD.com. So for JD, we can see that we already broke down this previous low of 46.83 on this low here. So this puts us in a very good position to come back to retest this 41.50 levels, which we are not too far away. In the event that break down and even breaking the $40 psychological support, then the next critical support to watch out for will be around this 32.70 levels. Let's take a look at the resistance. So this blue conversion line currently now is around 48.30, while this red baseline is around $52. Moving on to Baidu or Baidu, you can see that we are a very similar situation to JD. We are already back to square one at around 101 levels. That said, it's a very critical that we hold this $100 psychological support level, but it's likely for us to break down to potentially triggering some stop losses and start hunting just below the $100 level critical support. Moving on, in the event that we do not hold, then it's likely for us to come back to find more support at around this $82. Resistance to watch will be this blue conversion line at around 112 and 120. Next up, we have PDD. So PDD performed pretty well, but unfortunately, the sentiments brought it down as well. 38.2%, 55.59 did not hold, and now we are at this 51.48 levels. So in fact, this put us in a very good position to actually come back to retest this 44.82. And if that were to break down, then the $40 psychological support will likely to be tested. If that break down, then 31.01 would likely to be retested once again. Resistance would be around $62 to $60 for PDD. You can see that PDD things are not turning too good, and we are really starting to break down the cloud support level. So on the way down, the cloud act as a support, while the way out, the cloud would act as a resistance. So now we are below the cloud, signifies that we are currently on the downtrend on the short term. Moving on to KWEB. So for KWEB, very bearish, of no surprise. Alibaba is also bearish, and all the other Chinese stocks is bearish. After 23.72 breakdown, which was a critical support here, we're likely to be looking towards 21.41, which was the recent low in March. So it's likely for us to come back down further, even potentially heading towards $18 or $19 to trigger some stock losses just below this $20 psychological support level. Resistance to watch will be $24 and $25. Moving on to CWEB, you can see that CWEB is already very bearish, and in fact, we actually closed the week below this 35.50 support level, and we are already at $29 below the $30 psychological support. So that is not a good sign for CWEB. In fact, we are already at the all-time low. So it's likely for us to continue drifting down further and creating new lows day by day, unless we see a rebound. That we can rebound back up into a healthy price range. If not, resistance to watch would be $37 and $41. Lastly, we have FXI. So FXI, no surprise, equally bearish. Once we broke down this 26.13, couldn't get a double bottom here, and things started to turn very ugly. So the next support to watch out for will be around 22.70 levels, which is still around $2 to $3 away. You can see back then, this was some support here, and in the event that we break down further, it's likely for us to come back to even potentially testing this $19, just below this $20 psychological support level. Resistance would therefore be around 25.50 and 26.70. So overall, you can see that the Chinese stocks and overall market sentiments is very bearish. In the event that we do not get a double bottom for most stocks next week, it's likely for us to come down and create new lows. And hopefully buyers do come back at those bargain levels. So if there's any changes, I'll give you guys an update. Thanks for stopping by. Till we meet again, appreciate the manipulation.